JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 29th of August 2022, guys. So yep, welcome everyone. Welcome to this Monday's morning session, the last Monday for August. And well, the last Monday of summer, guys. So yeah, welcome everyone. I hope you had a wonderful summer. If summer is not, it's still not ending at your place where you are right now. At good for you. So yeah, guys, I hope, like I said, I hope you had a wonderful time, and I hope in general you had a wonderful weekend. Yep. So let's see what the market hasn't prepared for us for this week, and let's see how we can position ourselves for this week. Now, before we go further, as always, let me quickly go through our risk disclaimer. So yep, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which I believe you can find useful. You can check out for more information about us. Now, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225, and of course, as you are aware, and if you were trading on Friday, basically, I told you to be very careful because yeah, we had the anticipated Jerome Powell speech. So yeah, where investors kind of got the picture that he's more hawkish, and he's kind of mentioned that they're planning to keep high interest rates for longer until needed to maintain inflation. So this, of course, was not taken well by the stock market, and well, we saw that huge decline, and but not in all of them. I'll get to some of these in a bit, but basically we Nikkei here, we saw a huge decline, but basically just kind of followed suit, just from what we saw in the U.S. equity. So basically, yeah, those declined. I mean, the cash indices, all the other cash indices like the European ones and the Asian ones did decline as well. But I'll get into Shanghai Composite and Hong Kong Seng in a bit. So looking at this picture here, I mean, you can see that yes, it opened up with a huge gap to the downside, and most importantly, it fell below this highlighted territory that I talked about. So at the moment, of course, I understand that everything can change, but at the moment, at this point in time, I'm leaning a little bit more towards the downside. And yes, as long as it continues to trade below that 28,208 zone right here, then yeah, or in general below this highlighted territory, I'll continue targeting the downside. But initially, my target is the 200-day EMA, the 100-day EMA, which are around this 27,524 level, approximately around here. And slightly below this whole area is the upside line, which could be an interesting one as well. But again, let's go slowly on this one. Let's go slowly, step by step. For now, like I said, I will keep an eye on this area, and then we'll go from there. Now, Shanghai Composite, guys. Shanghai Composite, there we go. Beautiful drop, beautiful gap to the downside, but this is where the index reversed and pushed back to the upside. It managed to recover almost all of its losses. It's still trading, so Let's see if we can get into positive territory. I think it's a huge battle happening right now between the bulls and the bears. But just what I wanted to say is that it seems that the market is trying to resist that whole negativity from Jackson Hole last week. So and in general, I think that look, we had our decline, yes, okay, but will it be sustained? I mean, not everything is that bad, I would say, in the stock market. So there are plenty of opportunities. So be very careful in a way with that downside. Again, in this point right now, I will probably have to reposition here some of the levels, because again, certain levels have been violated, ignored, and that's why, yeah, we need to maybe relook at this. So one thing for sure, I need to get rid of this upside line, no longer needed. I have to admit, it didn't really play out as expected. However, I would say partially did work, because when we dropped below this 3,217.18 territory right here, yep, it kind of drifted lower. But to be honest, I think that's not really kind of a drop. It's more of a just opening, lower. So excuse me. So yeah, that's why be very careful here right now. This level has to go. Still, the upside scenario for me is the same. It's valid, and again, I'm also keeping an eye on still this potential idea of a hidden shoulders pattern, inverted hidden shoulders pattern, with the neckline being around here somewhere. So. But for that, I need to see a confirmation break first. If I'm not gonna get that, it might not be even an inverted head and shoulders pattern. Now, in terms of the downside, probably the simpler option here is to wait for a drop somewhere below that 3,200 zone and then go further south. Now, in terms of Hong Kong's Hang Seng Index, this one did not, okay, opened lower, but not significantly, I would say. And yeah, it still remains around, it continues to oscillate around that 21-day EMA, and the upside scenario for me is still valid in the near term, of course. I need to see a push above that 20,216 territory in order to go higher. With the downside, I need to see a drop below this 19,179 territory, somewhere around here, in order to consider a move lower. ASX 200, of course, this one reacted to the U.S. markets declining on Friday, and yeah, we saw this huge drop. However, look at where we held. We got a hold up near this 6,943, 950. So approximately around here, we got a nice little hold up, and yeah. So what I said to you before, that in order to go lower, I need to see maybe a drop below this area somewhere, and maybe a drop below this upside line, because basically I would go slowly, step by step on this one. If we do drop below this 6,943 territory, then yes, I'll aim for this upside, this short-term tentative upside support line. I have to stress this out, because these two are very tentative. So yeah, don't really, we might get maybe a little hold up or something like that around here, but if it fails to let's say hold, yeah, I mean, it could slide further if we do drop lower. But at the moment, I am also keeping an eye on this little potential range idea. I want to see what's going to happen here. Will we rebound? If we do, then yes, then maybe, you know, I'll consider this even more as a nice range, and then I'll wait for that clear violation of one of the sides before considering the next short-term directional move. The German index, DAX, of course, also declined. Huge drop here. Well, actually, that was dropping already before, you know, the Jerome Powell speech. If we take a look at the cash index right now, we'll see, well, we'll see a further decline. So basically, we dropped further south. We're currently sitting at around 12,805 zone, so somewhere below this hurdle right here, below this area. And one thing that I've talked about previously, I said that, look, if we drop below that 13,000 mark, I will start aiming for the downside. Initially, I'll aim for that 12,828 zone, which we managed to overshoot already. We're currently sitting below it, so in a way this idea is working out. If you're looking for some upside on this one, well, I would say keep your eyes on that psychological 13,000 mark. If we reverse back above it, then yeah, I'll consider a move higher, and yep, I'll consider maybe a larger correction to the upside here towards this downside resistance line taken from the high of the 5th of January. Now, at the moment I'm leaning for the downside, so let's see how this is going to play out, and yeah, let's be very careful. At the moment, the cash index is sitting below this 12,827 territory, which is the low of the 19th of July, so let's see if we can drift further south. Nasdaq. If you remember last week, I also talked about this idea. I said that, look, we might go a little bit higher. I was kind of hoping maybe to see a push towards that 200-day EMA, but then maybe a reversal back down. But it didn't really go for that 200-day EMA. Instead, we reversed straight away, of course. Right now, what I'm seeing here is something that I was mentioning before. Maybe, just maybe, we're seeing here a nice head and shoulders pattern. The neckline has been violated already, and I'm not saying that this is gonna, roll over here and start drifting heavily to the downside. No, I am only aiming right now for that 12,259 territory right here, marked by the inside. There we go. Marked by the inside swing high of the 26th of July, and if we find good support around here and we rebound, then yep, great. Maybe I'll consider a nice reversal here back to the neckline. But again, let's go slowly on this one, step by step. At the moment, like I said, everything is working out perfectly for the idea of a head and shoulders pattern, but let me just redo a few levels here. But if you're looking for the upside right now, I would say I'll wait for a push back above the 12,809 zone right here in order to go higher. The cash index, by the way, right now is sitting at around 12,460 zone, so somewhere around here. And if we stay below this downside line, then yes, I will go for that 12,259 zone or even below that. Now, jumping into DXY, the dollar index. So yeah, good reversal on Friday. Look at this. I mean, we dropped initially towards closer to that 21-day EMA, and then we reversed back to the upside with the help of Jerome Powell. We're now breaking, or at least trying to break this 109.29 level. We've already broken it, but we're struggling to kind of keep up and stay above it. So yeah, let's remain here. Let's keep an eye on this. If we stay above this barrier, then yes, I'll go further north, and I'll go for that 109.77 level, or even that psychological 110 territory. Now jumping into gold. Gold, look, also a beautiful decline on Friday. So gold reversed from that 21-day EMA, and most importantly, we've dropped below that 1728 territory right here, marked by the previous lowest point of August, and now we've created a new low for August. So yep, we're now on track in a way towards my target. My target is around here, the 1711 zone, approximately around here. So I'm aiming for that one. If we find support somewhere around here, great. We might see a bit of a rebound here, but I'll continue to target a downside as long as we stay below the 1728 zone. If we climb back and kind of continue to float, or not continue, but if we climb back up above this area and start floating above it, maybe we'll just get ourselves a nice little false breakout here, and maybe a nice reversal back to the upside here could be possible. So this 1728 territory is going to be something to watch here right now. So be very careful on that one. WTI oil, guys, very quickly on that one. So yeah, we did decline, but we've declined to this downside line. So I've talked about this previously. I said, well, on other instruments, for example, when we do break a, let's say, a downside line, an upside line, whatever, a trend line, and we do sometimes after the break when the the instrument reverses back to that line, it kind of acts, that line acts like a trampoline or something, and we rebound from it and move to the upside again. So at the moment, I would say the fact that we've climbed back above the 21-day EMA, yes, that is showing some positivity. However, I will stick to my rule and I'll wait for a push above that 95 territory, a strong push above that 95 territory, because at the same time we would be placed above the 200-day EMA. Now, ETC USD, guys, something that maybe they don't. If you are interested in cryptos, I mean, this one is a little bit more interesting because it kind of makes a little bit more movement, or at least it seems so. However, looking at this picture, quite an interesting technical picture here. We're getting a hold up near this lower side of the potential range idea that I've talked about last week. So we're currently getting a hold up here. If we can rebound, that's great, wonderful. We can go back to the upside. Initially, I'll target the 21-day EMA. If that gets cleared, then there's the 38.37 zone, the high of last week, and then so on and so on. But of course, at the moment, like I said, all eyes are on this area, because also here we have the 200 and the 100-day EMAs. So if we can get a hold up somewhere around here, great. We could see a nice rebound here back to the upside. Yeah, let's see what's going to happen here, because if it starts falling below all of these EMAs, guys, I mean, that's where, yeah, it could turn to be a little bit ugly for a few buyers. Now, jumping into a few pairs, AUD and ZD, guys. So this one is correcting a little bit lower, so everything's fine. We did push nicely to the upside every day last week. We had a nice positive day here. However, right now we're seeing a bit of a maybe retracement, which is, to be honest, quite healthy, as long as we stay above this area, but between the 1.1170 and the 1.1181. If we remain above it, then yes, great, we could see a nice rebound and a push to the upside. If we start falling below it and stay below it, then yeah, I'll consider a larger correction to the downside towards this upside support line taken from the low, the 19th of November. AUD USD, guys, very quickly here, we have ourselves a nice head and shoulders pattern potentially, but we're currently getting a hold up near the neckline. So this is what I talked about last week. I said that, look, if we push through this barrier, the 0.7847, then ignore the whole kind of head and shoulders pattern. But we reversed strongly on Friday for obvious reasons, and we are now testing the so-called neckline. Can we get a nice good drop below it? If we can stay below, if we can drop and stay below it, then yep, great. We will go lower. Then we could go for that lowest point of July near the 0.6680 zone, and then we'll just go from there. USD JPY. USD JPY. It's yeah, it's quite interesting. I would say it pushed nicely above this barrier, above this 137.46 zone. Now I'm targeting this this 139.39 level. In a way, to be honest, I have to admit everything's kind of working out in a way I was planning it to. The only thing is that what's not really not exactly how I wanted it to be, but because I wanted to see a better test of this 21-day EMA. But hey, we'll take that. At the moment, I'm aiming for this 139.39 level, and then I'm going to take it from there. If we clear this, yes, I'll go further north towards that psychological 140 level, or even above that. USD CAD, so also quite an interesting one. A few adjustments have to be made here. So last week I talked about this little hurdle here, the 1.2936, but I think that this is the point where I need to get rid of it, because it seems that more important here is the 21-day EMA. Although I think it sometimes varies, so sometimes it's the level, sometimes it's the EMA. So that's why this is my second least least favorite pair to trade because it sometimes has a mind of its own. So and it's very news driven. So yeah, not very not the most exciting. However, it does present itself with good opportunities if you're on the right side, if you're on the correct side. Now, at the moment, looking at this picture, I would say as long as it stays above the 1.3063 territory here, then yeah, great. I'll go higher. My next target is the 1.3136 zone or the 1.3224 level right there. GBP USD, guys. So beautiful decline. Everything's working according to the plan, because what I was talking about last week was that basically I said that, look, we did push, we did rebound from this highlighted territory, roughly near the 1.1760. We pushed higher. I said that, look, we might see a move maybe closer to this 21-day EMA. We really didn't go too close to this 21-day EMA. Instead, we made a false breakout above this 1.1878 level, and then we reversed back to the downside. We fell below this highlighted territory, and we stayed below this highlighted territory, and now we're drifting further south. So yep, at the moment I'm going to continue aiming lower. My next target, and this is where the problem kind of comes in, my next target, and this is where I need to kind of try and find a new target, and I think that this could be an interesting one right here. Let me just if I can capture this. There we go. That's the one that this is one. That's what I was talking about. The low of the 25th of March of 2020. And that's near the 1.1639. We are approaching right now that area. So I'm gonna only aim for that one. Basically, I'm not saying that this is like a very good area of support. No. In general, my target is the 1.1414 level. But again, something in between that, maybe this is where a little holdup could occur. Let's see if that's going to be the case. If not, then back to the drawing board. But again, at the moment, I'm trying to find at least something here, somewhere that could, give me a little bit of sense. Now, EURUSD, guys. Also, I keep on talking about this pair. It's quite interesting. I mean, I'm seeing some potential here for the upside, but again, later on maybe, or at least when I see a confirmation break. At the moment, it's just on a slide, so it could continue sliding. That's that's normal. But if suddenly it makes a move above the 0.97 territory right here and pushes above that 21-day EMA, of course, then yes, I will consider a move to the upside, at least towards the 0.98 zone, and then we'll go from there. And finally, EURUSD, guys. So yeah, declined on Friday, but this is where the interesting bit is. So unlike GBP USD is drifting to the downside. EURUSD is holding on, and at the moment, I think the ECB is trying to do all to bring it back above that one level, maybe. However, of course, cheaper euro helps out. Helps out tourism, export. So yeah. I think that with the whole kind of with all the problems that we're currently facing here in Europe, of course, yeah, maybe that's one of the options to go for. But again, that might go out of control a little bit. So I hope they are all controlling all that. So. At the moment, like I said, yes, I am still leaning a little bit more towards the downside. Previously, I said that, look, if we drop below the 0.9952 territory, then yeah, I'll go lower. I'll aim for that 0.99 level, and if that gets cleared, well, this will confirm a forthcoming lower low, and potentially more sellers could join in. So. Long story short, yes, I'm leaning a little bit more towards the downside as long as we stay below that 0.9952 territory. I'll get more comfortable with the downside if we drop below the 0.99 zone. And then, yeah, with the upside, well, this is where the interesting bit could come in. With the upside, I don't have a clear level. Ideally, ideally I would prefer to maybe see a, wait for a push somewhere above this area, the 1.0032, but no, probably that's not ideally. Ideally, a push above the 21-day EMA. That's what I would like to see. But we are kind of a little bit further away from it, so that's why I would like to see a push. A push at least above this 1.0032 zone, and if we get that move, then yeah, I'll go for that 21-day EMA, and then so on and so on. So guys, that's it for this session. I really hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your likes, your comments, everything. I appreciate that. So I hope you'll have a wonderful trading day today. Stay safe, have your stop losses in place, and yeah, everything will be fine. So thank you very much, and bye-bye.